learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in at April 1st, 2020, and the stock market is going to shift, or maybe it's April Fool's joke. No, but in all seriousness, we have the end of the first quarter. That is today. We have some interesting facts that I want to go over with you, but I want to talk about what happened today, and the market is going to get ready to shift us now into a new zone. This is my theory, my analysis, whatever you want to call it, but what happened today, it gave us a little bit of insight, and pretty much now we're able to narrow things in, and we're either going to see something and some big moves return by the end of this week, and if we don't see that this week and we just stay stuck in this range, it's starting to give a little bit more certainty towards a move coming in next week, and then we have earnings and all that setting up. So I want to go over that. I want to go over some of the economic data that came out today and the interpretation of it, because we were surprised. So I took a look at it after hours, and there's a few different things that we need to discuss with it, but it's really going to change the dynamic we have moving forward. And then looking at the plays and what we're going to do with premiums and the different opportunities, we're holding stuff. Do we average down? Do we go after more stuff? There's a unique opportunity where risk and reward is getting met right here. We finally saw some decay. We see some time, and so it's going to get interesting. And then we have a long-term deposit tomorrow, and I might make some trades. We're going to see depending on this shift, but we have some of those companies that we want to get lined up. So I have that for you. I got the keys. I got the plays that we made today and the ones I'm making tomorrow, or that I'm going to be looking at. I have a few different ideas, as well as now I made one of the plays I've been talking about for a few weeks in the video. I want to go over that play. It's a weekly play, and that's kind of even a realization I had this week coming into this mode here. We need to protect balances. We talked about that. Get a generic basic plan. Just have a budget and keep it budgeted. That's the first thing we want to talk about, but then also how to go about some of the riskier plays here, but being smart. So I did a smaller, kind of expensive weekly that I want to go over. So let's not waste any more time. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing. We're dropping big after hours. I saw that. I had to that interrupted. So make sure we see you in the morning. Did I tell you it was free? It's free information, free chat. Just be positive and respectful. Oh my gosh. No. But okay, that and the most important thing you need to do. Post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes? What are you playing? How do you feel? Are you in the weeklies? How do you feel the risk reward? What do you think about all of this? Shout out to Chad, baby. I love him. All right, so the market will probably be dropping as we're talking here, so let's move forward to the keys. We have a lot to talk about. One, earnings is right around the corner. So this is important, and literally, here's another analogy. Imagine what is going to happen when you approach a turn. Do you take turns at full speed? Things start to slow down, and that's what I'm starting to see here. We saw high velocity and high volume, and now things are coming down. The volume is definitely slowing down, and this is something that we talked about today. You could see here, the last few days, besides this after hours, this would have been the slowest day we saw in volume. And now, sadly, we're saying it's slow volume when, a few months ago, this was the highest volume, 100-something million, 190. We'd be like, whoa. But you could see relatively, the fact that we're at such a much lower price, if you did a dollar weighted average and you try to compare that, you would probably get some different numbers. So this is interesting what we're seeing here. But now picture the volume going up. We made a move. It slowed down again. And then the volume increased as we started to make up. As we kept dropping, the volume kept going up. And now things started to turn around. You're seeing the volume turn. So I think we're approaching a shift here. But watching that volume and what it's creating, this is important because now it looks like we're approaching a turn this week. We're seeing certain data come out. We're seeing different reactions. You're seeing, again, more health stuff come out, as well as some of these just even the president's meeting with different companies. We're seeing this stuff move slowly, and we're not really quite out there. The Fed's coming up with new stuff daily. It's just things are still moving a little bit slower. So we're either approaching that turn, and maybe I think it's still possible we kind of just hold up in a range this week. But if we don't get any more crazy this week and we don't see any of that crazy quickly return, it's going to be even more certain for next week, because then right after that, it's going to be earnings. And that is something I want to observe here. Does the market go into this earnings mode? Does the market start preparing for earnings and holding up? Or do we see volatility during earnings? That's something we haven't seen even during the trade war. Remember, during the trade war, markets would go crazy. It was kind of like this on a different scale. But then right when earnings came down, everything stopped. And the market was like, okay, we don't care about that for now. We want to see the numbers. So that's going to be important. I talked about it today. We're going to be talking about earnings a lot. I think earnings is very, very important. Some people say, isn't this priced in? I think so, but that's going to go with the next point we're going to talk about. It's going to highlight how unique this whole situation is that we're in. Nobody knows anything. A lot of these companies, most of these companies, their last earnings was 3 months ago when everything was doing good. So we might get some updates. And pretty much what I'm saying is nobody knows anything, whether it's priced in or not. We saw some bad news on companies today, and they didn't really kind of react negatively. You're not seeing that. Again, the markets have been up. More bad news has happened. The markets aren't moving. And this is leading me to think that some stuff is priced in. But once the data hits, once the real news hits, once these earnings hit, it's leaving a big margin of error is available pretty much, because I don't think anybody could really expect, you can't forecast something you have never seen before. We have no real picture of. So something is priced in, but it's just, and it could be, these analysts could be right, and that would be good, and the market wouldn't get upset. However, you have to see what's going to happen, and there's going to be a margin of error, and we could take advantage of that with this earnings. So that's what I'm looking for. But now the next important thing that we saw today was the PMI, and the data has been painting a different picture. It was really weird today because our PMI numbers ripped, and so did China's, and people were shocked. And now when you start to look into it, it's showing you how unique this truly is, because now what happened, the manufacturing and the services PMI that we had, those numbers went up today when you would have thought they were going to go down. And now why? It would signal that there's an expansion, because the PMI is a ratio. I don't have it up here, but you guys could look that up, Trading Economics. But the simple SparkNotes version is that it's looking at multiple factors. So what's going on, the uniqueness of this whole situation, we've never seen this. You have certain issues with supply chain, certain issues with demand, all of this across the board. So what's happening with the PMI is that some data is signaling expansion with people rushing orders, and the speed to which orders are being delivered, that is speeding up, and people are like, whoa, that's expansion. But now the other data points like new orders, backlogs, and all the other points, those are all contracting. Inventories, that's a big one. Those are all coming down. People aren't loading up on inventories expecting higher demand. They're keeping inventories low, or again, issues with supply chain. So even the economic data is getting a little bit more skewed. So what this is leading me to believe is that the real, like the trade balances and certain other economic data are going to be the most important ones, essentially. Meaning that some of these PMIs and other datas, they're going to start breaking. I mean, this is what's happening with bonds and a lot of other metrics, is that this situation is causing such it's wreaking havoc, and you don't know how to analyze it as well, because again, now this is just such a weird situation. It's even printing high PMIs, but orders and other stuff and other manufacturing data is slowing. But it's just the nature to how we get and record data. And even the Fed is talking about real-time data. That's something they brought up today. So keep that in mind. But again, with everything here with earnings, this is all just highlighting how unique this situation is wherever we're at the market. The fact is, something is happening right now. Something's getting created, and we're in the midst of it. And now, even to highlight that, today's the last day of the quarter of Q1, and to give you some fun facts about it, this was the worst overall quarter since 2008. So single quarter by itself, doesn't matter Q1 or anything. This was the worst one since the 08 decline. This was the worst single month since 08 in March. And then this is the worst first quarter of the stock market in history. And now, even for the next thing, we got to make sure we don't forget to keep our eye on it. It's going to be very important. It didn't come up. Oil's still at the low today. It was up. It's down a little bit now after hours. But watching oil's still at $20. But this was the worst quarter ever. Not first quarter, but entire quarter for oil in history of oil. That's forever. So keep a close eye on oil, but I wanted to see what was happening here with this after hours. We're really, really dropping here, and that's because Trump just said that expect to see some very black days and a very, very painful weeks. They said it's coming, and Trump kind of is having a grim tone right now, even as I'm recording this video. So that's what's going on, but this is causing a pretty big drop. So maybe this shift is going to happen even faster than we're expecting. But moving forward with this, finally, premiums are making moves. The options, you guys are seeing some options we're losing big on, some not as much, or they're down, then they're bouncing up quick, and then they're coming back. But time is still expensive, the plays with June and all that, and you'll see this is why. It's like the fact that the market could even just drop like this, and if this fear comes up, you see where everything's at. The fear could elevate. The ones with shorter time might lose out easier, but the ones with longer time, those are going to be up. So what I mean by they're expensive is that any contract like June, July, August, or even longer than that with a decent amount of time, anything that's not 50% out the money, saying that the stock is going to drop 50%, it's costing hundreds of dollars. I mean, it really is just really expensive. So we have to kind of pick and choose, and that's what we've been doing. However, what's expensive today might be different in the next few weeks. So we're going to see that. But I'm watching that. You could still get clapped with a lot of these plays, but the key is opportunity is forming. That's what this last 2 weeks brought about. Brought some theta. We were on the wrong side of a lot of plays. Some of the plays that we were working, they came down. We're down on the UUP, GLD, TLT, trifecta. But it's opening up other opportunities. So we kind of got to wait for that gap and take advantage of it, or in taking advantage of it sometimes is waiting and letting it form. So that is pretty much it. I hope you guys are ready. It's going to be exciting, so we better see in the morning. But let us get into the plays. So right off the bat, there's a few different plays that I got and that I like. The first one I got this morning, so I would need y'all to stay active and ready to go. If you know, you know. But I grabbed a JP Morgan May 15th 55 put, and this is what I mean, and you guys will start to see something even with my strategy moving forward here is how I'm buying these. Last week I was spending about $600 to $1,000 per order. So now I was wrong. We didn't get the move. The calls didn't appreciate as much. Some are still holding up a couple 100%, but it's like the reverse when we were buying puts high. So we got to wait a little bit. But there's also a lot of decay. So now I'm doing $500 or around there, $500 to $300 per order. So I'm lowering it. I should keep it the same amount, but the best part is this is that unique risk reward is that even though I'm lowering the amount by still buying in on these, and now the key you guys are going to see different plays as far as UUP, GLD, TLT, you wait for those. My logic with those, we're down 20, 30% on some of those. It's like going to the doctor. You go to the doctor, you're sick, they're going to go home for 2 weeks and then come back if you feel really bad. Same thing with UUP and all that. Those have a lot of time. Those are slow-moving plays. So I want to average down on those when those are down 50, 60%. And like the cases of like the Microsoft, a lot of the plays we put $1,000 on last week, we may have lost 50, 60%. We're down $500. We still have $500. So an extra $300, we'd still add to it. But now that the contracts have depreciated, it could also really reinflate real quick, or the key is try to get as close to the money. So JP Morgan, I got these 55 puts. I got 5 of them at 80 cents, and they actually went down in value. So the fact is they were a lot cheaper. We bought them at the cheapest. I want the banks, in this first quarter, banks are down 41%. So they've already taken a lot of pain. They can go down more. But like I said, I want some of the banks we're pretty much clapped on that BAC, but I like the exposure the banks have, and if anything, these could be some decent ones to flip, but I want to see the impact of banks. It's kind of even related to what's going on with the dollar, gold, and all that. So that was the first play. I really like JP Morgan. That's not bad. And then I made the play I talked about yesterday. I finally picked one, and I scaled in, and I did, $300 or so on there. But I grabbed the target. I got the target June 15th 55 puts. And now this one, that's why the JP Morgan, I only got till May. And that one's still 50% out the money. And that's what I was saying with expensive. Like, I still paid $80 for that JP Morgan, and it's still, 50 to 90. That's like 45% out the money. It's crazy. So I like these target ones a little better. We went over the thesis and why. So this one is, I'm setting up for earnings, and that's something I have to really reiterate here. Any of these plays, like even the Facebook one for yesterday, even if they are far out of the money, I'm hoping to get at the very least to flip these on the premium and extrinsic value. But the key with all of these plays is that they are all covering earnings. So even if the premium shoots up before earnings, or if I have that position, I can now go get a call for earnings, and then I could still be set up both ways. So I'm kind of just that's why I'm getting ahead of myself with even the balances. I'm willing to put up a little bit more, but I have a weird secret backstop, which is earnings, but doesn't mean you can't go crazy, because if the stocks move too much or the stocks stop moving, that is going to kill premium. And the thing is, when you spend a lot for premium, your risk is premium going down and no matter how it goes down, right? So got that target June 55 put. I got 5 of them at 65 cents. So these went up a pretty decent amount in target, even towards the end of the day. Their CEO said something, but they started dropping, and they did outpace a little bit more. And this is what I was relating them to, like Walmart and everything. So Walmart dropped 2% or 1.9. Target pretty much went down almost double. Let's see, Kohl's went down 10%. So you're seeing different retailers react differently, but I like that play. I like it for earnings. Again, they got some meat on the bone, so we will see. Even how's Costco? Yeah, remember we did that for earnings. Even Costco's looking pretty ugly. Oh, man. Ooh, see, Costco reported early, but that's it. Put Costco on the list. I want to look at Costco. I love you, Costco, but that don't look good. Then finally, the last play. Here is the weekly. I did it with NVIDIA. So this is what I've been talking about. Here's the play both ways. April 3rd, and now I'll show you why I got it. I kind of broke the rule a little bit, but this is what I was seeing last week, and it was still producing 1,000% gainers. So I want to see. It was kind of in my range. I did it both ways because I don't know. I would have naturally just got the call, but I'm glad I got the put in this case too because, again, NVIDIA could move, and this is something I've said for the last 3 weeks, but the problem was NVIDIA was pricing in a ton on the option chain, so it was still kind of expensive today. That's the rule that I broke because I have a range on NVIDIA that I go after. So putting it into perspective, I wish it was a little cheaper, but I like it. I think it exposes us to opportunity. So I did 2 plays. This one's a strangle. We played both sides, and we played it on the weekly. So these expire in two or 3 days. So middle of the week, you have less time. They're not worth that much. But what I got was the 287.50 call, and I grabbed this one at 67 cents. And then I grabbed the 227, and I played 64 cents, and that's for the put. But starting with the calls, why did I get these? Why did I pay it? I told you guys the range I like on NVIDIA is $60 for $10 out the money. In this case, and even when I kind of got it towards close, it was at like 264. This is 287. That's about $20, $22 for $60. So I was paying double the amount. I was paying $60 for double the move, or pretty much for half as much. So I thought it was decent, and then we did the same thing on the put side, but on the put side, I think it was like $40 out the money, so the puts were naturally more expensive, but we got the put. So I did 120 both ways, so pretty much I'm assuming by the end of this week, one of these contracts will make me more than $120. Otherwise, I will lose on both of them. And that's what I've been realizing here is that some of these, some of the bigger plays, the ones with time, it's been a little bit harder to maneuver. So I still want to build positions. Those are slower, those are riskier, but I do want to take advantage of some of these weeklies. But if I want to go after these weeklies, like literally I'm talking ones with 3 or 4 days left, we went after the dailies on Friday. We could go for some of these shorter terms, but we just have to control the budget. I can't be throwing $400 or $500 at them. I got to start going slower and start sniping these little, individual plays, because if we're hitting a bunch of them with a lot of big movements, those could start to add up. So that was pretty much it for those plays. As far as everything else, I'm going to be watching HT, and this is what we were deciding yesterday for the long-term portfolio. So I'm going to make a deposit tomorrow. I think I might add Snapchat, or what I think I'll do is I'm going to buy a growth stock first, something of good quality. We had a debate on this because now Coca-Cola is almost yielding 4%. So I think I'm going to buy some Coca-Cola, and then the remainder of the money I'm going to put into Snap shares. But I think we get the deposit tomorrow. I might make the first purchase on Coca-Cola, and then 2 weeks from now, I'll buy the Snapchat to see where that's at. But I'm going to be watching them. Even HT, I was considering HT. That one's on my list for long-term pickup. So we're going to see. But also the flip, too. The fact that Home Depot dropped 5%, this is showing you something, because now, even though our market went down, when you see some of these value names go down, even like Walmart, even like McDonald's, traditionally, you guys have been seeing those names drop when the market's going up. So watch these. And again, we know how we could play these. We have some time on the HD McDonald's, but now that short-term strategy, these might be some decent ones that we could start to snipe. So I'm going to be looking those. Still holding the Facebook. Like I said, this is the earnings play. What I would even do on Facebook is I'm going to even look for calls on this. So let's see how this plays out. But I have those put plays. So like I'm saying, if I want to set up for earnings, I will even start getting some calls here. So don't get it confused. But now even some of the calls are cheaper. So keep that in mind, but I'm still holding that. I'm going to be watching Boeing for this week. I mean, they've already had a decent move. You guys see, this is what I was saying with the premiums now. 2 days in a row, this thing's literally just cut right in half, right at the middle. That just killed premium. So maybe these might be a little bit cheaper, but again, small $50 play. I'm not going to go a lot of them, but one-sided directions on some of these stocks could be good. So I'm going to be looking at that. We got the NVIDIA, Target, JP Morgan, then Regen. They went up a lot today. And again, I like some of the drug makers. We've been playing Guild. We got that Myrna and all that still, but I like Regen. I mean, remember we played this a few months ago. We hit that the first time. Regen's at an important spot. It's doing good. It's holding up. I like it. I'm going to see for a plays. I already know it's going to be expensive. It's going to have a wide spread, but I'm interested in that play. I like it. Then on that same note, I'd watch Biogen. Same thing for them, but you saw they had a little bit more pain, but I think they could be, decent as well too. But all of these biotechs, they moved up a lot, and I like that. Then there's Abbott alongside of Johnson & Johnson. Remember I said they had that good news yesterday. Watch them for the continuation, but see how they react to the general market. I'm going to be looking at both those. I like Biogen and Regen on the call side more than I like Abbott. And then by continuation, I meant Johnson & Johnson or Abbott on the upside. So because they got a big 7% boost from that ventilator or the vaccine news or whatever, or the testing kit. So I think that could be good. But if they start to come down, we already sold out of those Johnson & Johnsons, but I think those puts came down in value. Then still holding those Apron. They're slowly edging up. Watch out for them and even Zoom, any of the counter trades if we start to see more decline. Those kind of antivirus stocks we've been seeing. No, not like Norton. Fire. Then Xerox, after hours, they said they're like abandoning their hostile takeover. They went over HP. They went crazy. I thought that was interesting. I mean, I kind of like some of these deals, but you guys saw what happened with Tiffany. So, and this is what I'm talking about, is as these deals get canceled and back on and this and that, this one was already in the news for the last week. So it's going to go back and forth. I'd keep an eye on those. So I'd even watch Xerox, but you guys understand the risk to reward there. Then McDonald's, this is the other one I was considering for the long term, but again, I like to play them, and like you're seeing today, it's very, very rare that you saw everything go down. You saw bonds go down, stocks, now all the value and growth. So this is, again, volume slowing down. I mean, get ready for the shift. And then finally, the trifecta. I'm still holding those. Trifecta plus Micron. We have that for earnings. They dropped a lot out of all the chip makers. So I thought that's interesting. I'm still holding that play. I think it's down like 30% or more. But we'll see. Good thing we got time on there. But all of these, and like I said, the analogy with the doctor, you got to get a little bit more sick before. Once it gets serious, then I will average down. Otherwise, we have big positions. They have a lot of time. These are slow movers. If anything, the only play I'm going to be looking for is GLD, because those Mays are going to expire very, very quickly, or they'll decay faster. So what if I do average down, I need to be down honestly, with some of those plays, since how slow they move, I want to be down like 70, 80% for like a long time. Because again, if we're already losing on them now, we're already hitting 30, 40%. You've already hit a good amount of pain. So I could wait a little bit, especially when there's up till June. Once it gets really sick, then we'll perform a surgery. Otherwise, we could deal with the pain a little bit. Let's see how serious it is. But that's pretty much it. Watch the markets. It's going to be crazy. I hope you guys are ready. I hope I see you in the morning. I hope you know you're blessed. I hope you keep your head in the game. I hope you stay relaxed. I hope you control your budget. I hope you know I love you. I hope you know Chad loves you. I hope that you hope. I hope that you have faith. I just hope you're ready to go, baby. So that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I told you I need your helmet on. You need to be in the game. Now is the time to focus. Okay, yeah, something's happened. I don't care. Get back in the game. You had money. You lost it. Whoop-de-doo. You lost money. You made it. You didn't give back. Whoop-de-doo. Get in the game. We got to focus. The opportunity is here. I said it yesterday with the sirens. Don't get lulled to bed. You need to be smart. You need to control the budget. Learn, baby. Learn. You need to evolve. You do not repeat the same mistakes. Oh! But I love you, baby. The code loves you. I love you. Stay blessed. Let's go!